you were on the Titanic, would you sell your lifeboat? Of course, the lifeboat on a Titanic would be priceless, right?
Very
But you
expensive,
wouldn't
yes.
sell it. You'll use it, right? And
Patrick, welcome back to another episode of our Worldview and Gold. And finally, it's a bit cooler in Hong Kong, but unfortunately, that's not the only thing that's been cooling lately. The precious metal market, it's crashed rather hard this week, huh? Correction in both the gold and silver markets. I think silver's down more than 12% from its highs as of this moment, and gold is also down about 6%. So, how do you see this trend developing? Is it a healthy correction, or is the bull market ended?
well, to be honest, it's anybody's guess, but I think a correction was overdue. We've been talking about this quite some time now over the past few weeks and months. And I mean, if you look at the gold price development over the past 2 years, it's been a pretty solid curve upwards. And if you think about it, January 24, we were at just over $2,000 an ounce, right?
Hmm.
And it wasn't too long ago that we broke through the $3,000 barrier and then set record after record after record and broke through the 4,000 barrier and kept steaming ahead, towards 4,500 an ounce. And yes, a correction, a price adjustment down by over 5% in a day is massive in the gold market. But the price was such that you can't blame people for taking money off the table, right? I mean, if you invested 20 years ago at $500 an ounce and the price is at 4,500, you're at 9x your investment over 20 years. That's a very, very, very healthy development. And I think that the increase was starting to become so fast that I think some people were becoming slightly nervous that this was developing into a bubble, and got out of it before it burst completely. Now, the interesting bit is it is holding firmly above 4,000. I mean, if I'm looking at the trading system now, we're nearly at 4,100. So
Hmm.
it's solidly over 4,000. So even though there was a correction, it's not as if it's crashed completely and it's, day after day after day losing 5% a day. It could be a dip. I mean, the demand is still relatively strong. From what you hear, the refineries are still very, very busy. They are producing a lot of 400-ounce bars, which points to government and large institutional investors. That demand hasn't vanished. As you can think, especially governments, when they go on a buying spree, they're not looking at the day-to-day price of gold. They make a strategic decision and then start acquiring the gold in larger quantities, in the tons. So that demand hasn't vanished. The retail demand in silver, in particular, has cooled off a little bit. I mean, maybe we overdid it a little with the run on silver and the people having the fear of missing out, the very famous FOMO. That being said, we're still, if I look at the silver price now, we're still nearly at $50 an ounce. We're at 48.60, 48.50 US dollars an ounce. That's quite a performance. So again, it hasn't cratered. Yes, there was a price correction, but it didn't crater back down to 40 or 30 or below. And we're seeing a pretty solid floor here. And therefore, to your question, is it a dip? Is the bull market over? I wish I knew the future, but what I can say is that the people I'm talking to, at least, they're not regretting purchasing their gold products or their silver products over the past few weeks. And demand is still pretty strong. Even as we're speaking now, I see some orders coming in, and we're discussing quotes, larger quotes. Again, certain customers that we haven't been dealing with in a number of years, all of a sudden resurfacing. And just today, again, we here in Hong Kong were approached by potential customers in America, potential customers in Thailand, and potential customers in Australia. So those would not be markets that we deal with on a regular basis, especially America. I mean, America is the other side of the world as far as we're concerned. We have customers there, and we've serviced customers there over the years, but we don't have a lot of people there, and you do wonder, how they even find us on the internet and then reach out to us and ask for quotations. And like I said, the same for Australia, same for Thailand. And interestingly, those particular prospects were actually inquiring about storing here in Hong Kong and saving on the shipping cost. So it's still healthy in terms of demand. Um, and if you're buying physical, as I always say, uh, you should be focusing really on the qualities of the gold and what gold does for you rather than looking at the day-to-day price.
Hmm.
You purchase physical gold with a view of holding it long term, ideally passing it on through the generations to your children and then maybe your grandchildren, and you really using it as an insurance product rather than an investment product. If you want to play in the market and use the volatility to make money, please don't do it in physical bars. The trading is just too slow. Do it through an ETF, do it through a gold account, or similar products that you can trade on your online brokerage account. The physical product is too slow moving to be a product to be sensibly used to exploit market volatility for profit.
So speculation, they should go with paper gold
Yes,
and ETFs. But I, I,
correct.
I agree with your point. People should adopt that long-term mindset, which is kind of the government's approach, because governments are price agnostic. They're not looking at, prices day to day. They don't care about price dips. It's because gold and silver, well, more so now silver as a strategic metal, they're deemed as strategic resources. So they're just stacking more and more whenever the opportunity presents itself, right?
Absolutely right. I mean, the whole reason why do central banks buy gold? The most common reason is exactly this insurance aspect that a physical gold bar is an insurance against political turmoil, economic systems collapsing, your currency tanking, or maybe because of a war situation becoming immaterial even. So in really times of distress, when everything else is failing, gold just has a very long track record of being an acceptable form of payment. So even governments use it to settle trades. How did Germany end up with such a large gold reserve for their national bank? But back at post Second World War, a lot of the trading that Germany did with America settled in physical gold. So, the American government settled trades in physical gold with Germany, and Germany just kept collecting the gold and didn't convert it into US dollars or into Deutschmarks or into euros. And now they're sitting on a very healthy pot of physical gold for the reason that if everything else fails, that will perform. Because what else would? Trading will continue. Governments will have to settle invoices, will have to settle bills, will have to deal with other governments. And if their currency isn't accepted anymore for one reason or another, then at least they can fall back on gold in order to settle their outstanding liabilities. And what is good enough for a government should be good enough for every individual out there. And actually, on that point, I actually came across a very interesting article on LinkedIn, sort of explaining why, even though the gold price was so high, there wasn't a huge rush of investors trying to sell their gold. And the title was, "If you were on the Titanic, would you sell your lifeboat?" Of course, the lifeboat on a Titanic would be priceless, right?
Very
But you
nice.
wouldn't sell
Yes.
it. You'll use it, right?
Of
And
course.
interestingly, you see that in the retail investor market broadly as well. Despite the gold price being so high, there's no massive rush for people selling their gold holdings. And why would they if they have it in physical form? Just keep it. It
But
will always perform.
this is for institutional investors, right? The
Correct.
no rush. Because on the retail side, we've seen, in Hong Kong, there's a pretty mad rush for people to sell their gold jewelry or little gold trinkets over the past couple of weeks.
Yes, of course. I mean, there is a certain sector of the retail market that is cashing in, and I think that contributes also to the price development that we've seen over the past few days, right? Where,
Mhm.
we've gone from nearly 4,500 down to 4,000 and now back to 4,100. Of course, and who's to blame anybody at this high gold price to, go rummage through their cabinet and find their earrings and bracelets and necklaces and what coins or whatnot, maybe little bars that they got for a 10 years employee in at their employer.
Yeah.
So absolutely, you do have a certain segment of the retail market that is cashing in on the high gold prices. That said, and you can debate now whether a family office is more a retail investor or an institutional investor, of course, or a high net worth individual. Is that more institutional or is that more retail? But overall, I still count most high net worth individuals and most family offices into the retail market because their gold positions usually are not that large. They're not buying 50 kilos, 100 kilos, 200 kilos a trade. They're buying 4, 5, 6 kilos, something like that, to have a strategic physical position. So I put them more in the retail bucket, and those investors are not selling as far as I can see.
Hmm.
Those investors are actually, even at the price that we have now and that we've had over the past few weeks, are getting quotes and actively considering adding to their gold holdings. And that's what I was talking about. These are very strategic, retailish investors that are not opportunistically selling, but are even at these high prices adding to their physical holdings.